what are the best dividend growth king stocks here in 2019? That's exactly what we're going to be looking at today, and we're going to go over some examples of companies that are actually dividend kings that I think are actually really good plays for the long term. So a quick definition here, a dividend king is a company that has been growing their dividend consistently year over year, consecutively, for at least 50 years. And this is honestly no small feat. There's actually less than 30 companies out there in the US out of say 3,000 that are able to say that they're a dividend king. Now, although all these dividend king stocks may seem like the best dividend stocks to invest in, why would you ever look at any other stock? There are things that you need to look at deeper which makes some of these dividend king stocks better than others. In fact, some of these dividend king stocks I would personally never consider investing in because the future growth potential is actually not there when it comes to capital or the dividend increases. So what we're going to be looking at closely here today in this video is the dividend growth rate, more specifically the 5-year growth rate. And what I did was I actually filtered through the list of the dividend kings and only picked dividend kings that had a minimum growth rate for the dividend of 10% year over year. Now this video is going to answer the question as to what are some good dividend stocks to invest in, what are the highest growing dividend kings out there, and I'm also certain that you guys will actually come across at least one of these stocks here that you've never heard of before, so you can take some time to look into that even further. So let's start off here with our first pick, which is Dover Corp. So this is a company that creates industrial products, and it's a fairly small company at around a $14 billion market cap. They have 3 segments that they sell products in: engineered systems, fluids, and refrigeration and food equipment. And the stock's performance has been fairly strong since the 2008 recession. But the one thing you'll notice is that every time the market has a recession or a slowdown concerns, the stock really takes a beating, as shown at the red circles here. And considering we're possibly entering another economic slowdown, possibly a recession, this could be the case once again, so that's something to be cautious about with this company. Nonetheless, we're here for the dividend info, so let's look at that. They currently pay out a dividend yield of just under 2%, and their payout ratio is just under 40%, which is extremely healthy. But what's more impressive is their dividend growth, which has been growing for 62 consecutive years. The information here shows 16 years, which is incorrect, so ignore that. I looked into this further, it's actually 62 years. But what you can see here is that the average growth rate is well over 10%, which is very strong. And the graph really shows how rapidly they have increased these dividends, especially recently. So one thing to make note of here is that we may see a slowdown in growth, but based on the dividend payout, I believe this company here will continue raising their dividend even through the next recession. So what a way to start off the list here with a solid company with a solid yield. But let's move on to our second pick. So this company is called Hormel Foods Corp, and it's a company, again, I've never come across before personally. And this is another fairly small company here, around a $22 billion market cap. So what this company does is actually fairly simple. They produce and they market various meats and food products in the United States and internationally. They provide all kinds of foods, from frozen to fresh, to canned meats, to microwavable meals, and much more. And the stock has had a monstrous run since 2008, going from around $7 per share to now sitting at around $45 per share. Whoever invested in this company during the last recession made bank on this investment just on capital appreciation alone here. But let's take a look at their dividends. Current yield is around 2% and the payout is around 47%, which are both healthy numbers to me. But of course, their dividend growth is what we're here for, and this company has been growing their dividend consecutively for 52 years. Since the recession, you can see that their dividends have climbed from around 19 cents annually to currently around 75 cents annually, which is almost a 400% increase in just 10 years. And this is shown by their growth rate coming in at around 15% year over year, which is absolutely incredible growth. Honestly, anyone who's gotten into the stock in the last 10 years, congratulations, because this is one of the best dividend growth stocks I have ever come across. These numbers are impressive, and it makes me wish that I was investing in these stocks 10 years ago. Alright, moving on to our third pick is a company I'm sure you've heard of. There's been tons of news about this company lately, and that company is 3M. So this company, unlike the other two that we just covered, has been making 52-week lows recently, so it's kind of on the other spectrum here, from great incredible growth to actually a slowdown and a correction. So this company, if you haven't heard of, is another large industrial company, and they actually have around $100 billion market cap right now. They operate through 4 segments, which is safety and industrial, transportation and electronics, healthcare, and consumer. I recently covered 3M on my channel, but if you guys want a more in-depth look on the stock, where I stand on the stock, if I'm investing in the stock, let me know in the comment section down below and we can create a video on that. You can see currently that 3M took nearly a 40% correction, so this may be a good value entry point here for this stock. We're currently sitting near 52-week lows as investors fear economic slowdown. And like I said, this could also happen with our first pick, Dover, as well, so keep that in mind. 3M currently has around 3.3% yield, starting yield, and this is the highest on our list so far for starting yield. And the payout ratio is around 55%, which is unfortunately also the highest on the list so far. Although 55 is still sustainable in my opinion, I'd be more comfortable with it closer to 50, ideally under 50. Now looking at their dividend growth, the company has really stepped up in the last decade, but I personally feel we may be entering a period in the stock like it was between 1997 and 2003 or between 2007 and 2011. The growth of the dividend was there, but it was a very small amount of growth year over year. Nonetheless, this company has been growing the dividend for 60 years consecutively, and the current growth is around 10% year over year, which is still very healthy. But like I said, one thing to keep in mind with this stock, if you plan to invest in this for dividend growth, is that I think that this growth rate will drop closer to maybe 5 to 7% in the next few years, because they are kind of working through some internal struggles. The economy might slow down, and that'll put a lot of pressure on this stock. The fourth company is another massive company that I've covered recently on the channel. I absolutely love this company. I think it's one of the best dividend growth companies out there, and that's Lowe's. These guys are only number 2 to Home Depot out there for home improvement, and it's surprisingly a very strong dividend growth stock, and the numbers I'm about to show you are probably going to raise your eyebrows a bit here. But first, let's look at their charts, and you can see that it's done some good growth in 2008, recently took around 30% haircut, which provides a good buying opportunity for the long term. The dividend growth here though is where this company shines. Their current yield is just under 2%, sitting at around 1.9, but that payout ratio is only 39%, which is a huge reason why I love this stock. The dividend has been growing for 55 years consecutively, and the average growth rate, hope you're sitting down for this, is a whopping 20% year over year, which is by far the best growth on this list so far. Now, regardless, in my opinion, how the economy does, thanks to its low payout ratio, I think that Lowe's can sustain this dividend payout and increases in the coming years. Maybe the stock won't grow at 20% in the next recession, but I'm sure that we're going to get at least a double-digit growth moving forward. Coming in number 5 is another industrial company. You'll notice a trend here, and it's a company called Norton. So this is a very small company here, sitting at around a $7 billion market cap, and it makes a lot of random things really, like producing adhesives, polymers, and that kind of stuff. The stock has done quite well in the last few years, providing investors some good gains on their investment. The dividend is currently sitting at a measly 1% starting yield, so a lot of people may overlook the stock right away. But the payout ratio is at only 24%, meaning that this company can increase its dividends, sustain that increase in dividend for a very long time. Their growth in dividends has been amazing as well over the last 54 consecutive years, and they have continued to provide value to shareholders in their dividend payments. Their average growth rate is around 13% year over year, which based on the payout ratio is very sustainable over the foreseeable future. The only drawback here that I can see is that it's a smaller company, so you may see a lot more volatility in this stock in the next recession or economic slowdown. So that's just something to keep in mind. But if you're a dividend investor holding this for the long term, that correction will just be an opportunity to load up even more shares in this stock. Alright, so closing off our list here, coming in number 6 is a company again I've never heard of before, and that company is called Parker Hannifin Corporation. This is a $22 billion company that operates in 2 segments, diversified industrial and aerospace systems. So here you go, you'll notice yet another industrial company. Now the stock has done well for investors in the last decade or so, and although it isn't as impressive as some of the other companies we've covered, it still returns some good value here to investors. Their dividend is currently sitting at around 2% starting yield, but the payout is again very low at only 29%, so we got tons of room to grow. The growth rate over the last 62 consecutive years has had an average of 10% year over year, especially recently. But we did see a slowdown in the last few years from this dividend. But last year we did have some good growth in the stock again for dividends, so let's see if that's sustainable moving forward. So one observation that I've made here, which I hinted throughout this video, is that a lot of these stocks are in the industrial space. And the part that concerns me is that since we're in a late stage of an economic cycle here, possibly a recession in the next couple of years, these kind of stocks, industrials, get hit pretty hard, which is why they may be looking as very good values right now. Now again, maybe the economy is just in a slowdown phase, maybe we'll resume growth again in the next couple of years. That's what happened a few years ago. And if that's the case, then you're getting some really good bargains on these stocks, because when growth starts picking up again, these stocks are going to just continue moving up higher. But if we do enter a recession, I think what we've seen in 3M recently with that massive correction in the stock is something we can see across the board in a lot of these stocks we covered here today. We may not see a correction of 40% like we did in 3M. It may be higher, like a 50-60% in these other smaller companies. But again, if we're investing for dividends, that doesn't really matter to us. We're not looking at capital appreciation. We hold it long enough, we do suspect that these stocks will recover and move higher while increasing their dividends. So I'd be very curious here to hear what stocks you guys own on this list, if any. Now I'll tell you I own one of these stocks on this list. If you want to take a guess as to what that is, comment it down below. But either way, guys, hope you enjoyed this video. Drop that huge like. It helps these videos out immensely. It's the best way you can thank me on this channel. Hit that subscribe button down below as well to join this community. We're almost at 15,000 subscribers here, so thank you so much for your support. Don't forget to invest positively, and I'll see you in the next one.